Welcome everyone. Welcome to my channel, Stock Market Technical Analysis. On this channel, we really use technical analysis to really find our next trade idea and hopefully make some money here. So that's kind of the name of the game. I want to go through the broad market analysis today, and we'll look at some individual stocks and kind of scan around for some trade ideas, and then we'll wrap up. Okay, guys, if you're new, check out my Stock Market Technical Analysis course. I priced it extremely cheap for, it's a good value. Let's just put it that way. It's not cheap, it's a good value. And the link is in the description below. That's about 4 to 5 hours of video training going across all the concepts that I teach in my daily videos and cover. So check that out and then leave me a thumbs up on your way out. All right. Here we go. Triple Qs. Not a lot of change today from the last couple days. You can see here on the daily chart, we're just thrashing around. We're just going nowhere basically over the last 4 days. I would think we're going to get some movement to the I'm thinking we're going to the downside. As far as I can tell, we've got a bear flag playing out. You've got the flagpole, and then you got the flag, and then what we do is we take the flagpole and could just measure it down like that, and it puts us down in this 326 range. So that's the target right now on triple Qs, and that's what I'm anticipating. I think that we should break down soon because the flag is becoming pretty mature at this point. So we should start to break down. Likely the breakdown is going to come in the form of a gap down. So I suspect, and again, this is just what the charts tell me, I suspect that, after the market today or maybe before the market tomorrow, we're going to get some sort of negative economic news or some sort of negative news in one of the tech stocks. I don't exactly know what it's going to be, but the chart tells me that it's likely going to break soon, and so they'll probably need a headline to slap that on. All right, so that's all I see there. And again, we got the 200-day moving average right up here at 366.43, still below there. So moving on to the SPY. Same thing on the SPY, you're flagging out. Now we're above the 200-day moving average right here at 443, but we are flagging out. And so the flag is like this, and then you take that, move it up to about there, and it projects us down to, right now it's about 408.80. So we can go ahead and mark that out. There is a little bit of a gap kind of right here, and it's a little bit, we'll just mark the exact flag out. Somewhere right in there. But I think we'll probably go down and fill this gap right there at 450. All right, so that's what I see on the SPY. Small caps, IWM, again, still below. This was the big sideways trading range. We broke to the downside. We have not recovered that. I suspect they're not going to recover it. All right, now we could get close. We're continuing to rally. We've got some resistance up here at 205. And then another point of resistance, big resistance up here at 209. So if they want to keep rallying up, we might hit that or get close, and then the sellers will step in for the next down leg. I don't know if it'll get that far. I mean, this is kind of flagging out as well. You can see we're just making almost like a pennant here, and we're getting close to the end of the pennant. So I'd expect we're going to break to the downside as well, but those are some levels to watch for the upside. Big resistance overhead, big resistance right up in here. So as you get into that resistance area, that's where the sellers are going to want to be. So expect that. Okay, let's get into some trade ideas. LPX. Now, again, we shorted this thing right here on the sell signal right there on January 21st. It's been chopping around and hasn't really broke down. You can see we've kind of recovered this trend line now right here on the daily chart. That's relatively impulsive break to the upside. I'm going to go ahead and stop out of this one for the time being. Now, I might be wrong. Maybe they'll break down tomorrow, but I can always jump back in. As of right now, it looks like they're starting to recover the trend line, and I don't want to be in it if it's going to recover. So for me, that was a loss of about 5%. And again, that's why position sizing is important. You don't want to load the boat with any one trade. You want to spread that around across multiple trades. 5% is it was still a good trade. The risk reward ratio, the profit target is down here at $50. So if you know, the short trade to the downside was about a 23-24% profit target for a 5% loss. Risk reward, that's a 1 to 4. So that's still worth the trade. You take those trades, you know, you take those high risk reward ratio trades, and you don't have to win them all, because the ones that you do win, you win big. So that's how you make money consistently over the long term. But at the end of the day, you know, we have to manage risk, and this one's just not doing what I'd like it to do. So we'll stop out. We'll jump back in if it starts to sell off impulsively. Okay, Ford. I closed out this trade this morning. Took profit on this one. It was dipping down below or near this 200-day moving average, but obviously it looks like, you know, the market was feeling kind of bullish today, and so everybody was stepping in and buying pretty much everything. So I took profit when we were down here because I was looking for it to bounce, and I'll just re-short this thing if we get back up to this 1906. Okay, that's big resistance overhead. See how that was big support, and we broke it with a gap down. So any move back into that area is that's where I want to sell the rip, all right, or re-short the thing. So if we're gonna rally here, we could get close and then roll over, all right. So that's what I like, but you know, it did. Why not take profit this morning? You know, I shorted it right up here at this resistance line back here in mid-January, and in a matter of less than a month, you know, the thing fell 32%. So why not take a 32% profit as we get close to the 200-day moving average? It just makes sense. So, all right, I locked in nice gains on that one, and you know, if it bounces, I'll just re-short it. But for now, we're gonna move on. GameStop, all right, I added to my short position today as we rallied into downtrend resistance. So on the hourly chart, well, this is on the daily, but you can see we made this former high right here. We got the high here, so I marked this line out right there, and we were rallying right up into that trend line today, all right? And it's actually slightly lower, but basically we were rallying, you know, pretty impulsively, but still just going right into resistance. I added to my short right there on the tag of resistance, and now I'm looking for the next leg lower. All right, if it breaks above this downtrend line, then maybe we've got some more upside, and we'll probably look to stop out. But big resistance overhead. This is an area of resistance. You can see horizontal resistance right here at 131.40, and then right there at 120. And we rallied pretty much right into that. So big resistance with the downtrend line is the area that I want to be taking or adding to shorts. C's, I'm still short this thing, staying with it. Again, C's rallying a little bit today. We could run up and do a back test of this trend line on the daily chart. So there's your trend line right there. Again, we had negative divergence that has been building. Okay, so this is your last divergent high. We broke trend and we're back testing. That's all this is, as far as I can tell. So maybe they want to run up and hit the test, you know, this trend line. Maybe not, but ultimately it looks like a back test, and we should continue lower as we start to downtrend like that. All right, it's going to take time, and it's not going to just go straight down. It's going to work its way lower, but I still like it. I don't see any reason to get out. Okay, net. So net is rallying into big resistance right here. You can see this level at 111.32. That was resistance before, then it was support. Kind of chopped through it a little bit, but we're right up in right against that resistance line. The 200-day moving average is just overhead. So it is possible that they, you know, pop this, hit the 200, then roll over. But this is the area of resistance on that one. I'm not really interested in trading this. I think, you know, it's already played out for a pretty big downside move. Usually I want to start shorting things when they're way up here and everybody's extremely euphoric and we get the sell signal. That's where I like to short. Now that it's come down a lot, you know, I think there's probably some more downside, probably down to this area, 61.70, and then we'll probably find a good bottom down there. But again, it's already halfway through the short trade, so I'm just kind of pointing that out. Someone asked me to point out CAR. So CAR is reporting earnings here in the next day or so. And you can see on the daily chart, uptrend line coming off your March 2020 lows. All right, so we held support, and basically this is the trend line right here. All right. We don't really have negative divergence on this thing. So you can see we're just downtrending in momentum. Momentum basically completely dropped off. And there it is in the RSI. And we are downtrending in price. So no negative divergence. So I would not go short on this thing. It could, on earnings, it's going to gap down or up probably pretty big. There's no negative divergence though. So if I had to bet on it, I'd probably say it was going to gap up. But again, I don't see any indication or reason to buy this right before earnings. It's pretty much gambling, not really interested in it, but I just wanted to point that out. Okay, new trade idea, Alcoa. I see Alcoa as a short, and what I want to point out on the daily chart, here is your March 2020 lows. Here's a pretty clean upward price channel. All right, as we started to build the channel, we broke the channel right here. We did it with negative divergence. So you'll see here, there's negative divergence on the RSI and, not really there on the PPO, but we had it on the RSI. It broke, but there was no follow through. Instead, we got just a continuation of the upward channel or price action. So, but all we've been doing at this point is back testing. So you can see we back tested, we fail. Back tested all through here, we fail. And then recently ran up, hit a back test. Earnings is out of the way, so we don't have to worry about earnings risk. And we ran up pretty strong today. It's up about 10%. Again, this is, the area that I like to short at is right into major resistance. Again, also, if you look at the PPO, we're making a divergent high on the PPO and slight divergence on the RSI, which means, we're downtrending in momentum still and making a new high in price. So very bullish price action with negative divergence right into resistance. This is where I like to short at. Okay, so I'm taking a short on this one this morning and looking for this to trade down to, we'll probably have some support right here at 57.40 and then probably go to hit that 200-day moving average, depending on where that might fall. So again, that's what I like on that one. Okay, PayPal. No trade yet. I'm keeping an eye on it for a potential long trade. Now again, PayPal's been really sold off pretty heavily. So we're looking for a long trade. Pretty oversold here on the RSI, sitting at 23.84, which if I roll back and look at, that's about as oversold as this thing gets. Occasionally you'll get down to a little bit lower, but you can see over the last pretty much its entire history, it's only been this oversold on the daily chart. You had once back here, back in 2018. That's where the Fed stepped in and pumped things back up, and then just recently right here. All right, and then, kind of where we're at now. So we've only been under this area 3 times in the history of PayPal on the RSI. Okay, doesn't mean it can't keep going lower, but I think it's probably about sold out. Now they're making it look like it's just going to keep crashing, so everybody's, bailing. But what we're looking for is the reversal or an indication that, okay, this is at least a short-term bottom. The trade that I like on this is if we get some sort of sign soon, then we'll trade it up to this downtrend line and gap fill about 175. All right, and from where we're at right now, that's a move of about 50%. So I like that if we can get it. Again, not an actionable trade yet. When I look at the hourly chart, we're starting to get some bullish divergence on the hourly. See the PPO, how we're starting to kind of move up, and yet price is continuing to drift lower, and then the RSI is just barely got it, just barely got some bullish divergence. So we're starting to get it on the hourly, but we don't have a buy signal yet. So the buy signal that I see is probably a recovery of this 127.50, 127.60 area. I'd like to see a recovery, kind of a gap up maybe, and then just off to the races kind of move. And that area that's your long-term trend line coming back to 2016 on the daily chart. Okay, so we're starting to get the setup just barely, and but again, we don't have that recovery yet, so keep an eye on that. And gold. All right, so gold's just continuing to coil on the daily chart. We've got this big triangle. All right, so it's just basically there and there. This is an indecision pattern typically, so it gives us no real clues as to where where it might go after here, but it's typically going to be an impulsive breakout of this triangle, either up or down. Now, I would lean towards up because, again, we're in a bull market and the trend is up since 2018. You've got an upward long-term trend. We had a big long correction back here in August 2020. Again, if you followed my channel, I exited all my mining positions, kind of in here basically, got out of all those positions and started to scale back into those positions down here. All right. And we're, they're working, they're not, we haven't started the big, huge leg up yet, but we've been building a position. And if we get that breakout, it's going to work out really nicely. Again, we had big bullish divergence building. All right. So each one of these little lows, that was a divergent low. This was a divergent low. All right. And then we've been coiling ever since. So we've got bullish setups, bullish momentum, bullish longer term bull trend. We've had a big correction. So I think we're going to break to the upside. And it's probably going to come on the news from the Fed. Maybe the Fed's going to walk back some of their hawkishness. So here's how I see it playing out. And then I'm going to wrap up, guys. I think that it's likely that the markets are going to continue to sell off into the Fed. All right. The Fed comes out in March. I don't know the exact date, maybe the first or second week of March. And it's expected that they're going to do a 1/4 point rate hike. And they will. Most likely, it's almost guaranteed they're going to do a 1/4 point hike. But I think what they'll do as the market continues to sell off and get weaker, they're going to start to walk back some of their hawkish talk. So again, like I talked about, they want to walk the market down. So if the market's coming down into their meeting, that gives them an opportunity to ease off a little bit, allowing the market to kind of recover some of the downside move. And then gold, that's probably likely where gold's going to break out to the upside. So that's all I see, guys. Again, leave me a thumbs up. And if you have any trades that you guys have spotted and you want to let me know, leave a comment below and I'll take a look at those. And I will catch you guys on the next one. Bye.